Hey guys, I'm taking some mortgage training here, and I thought it was actually important this is kind of the tail end of 20 hours of training, continuing education I've had to take for my financial licensing. I know this video is very non-professional. I'll probably make it private later, but this doesn't make any sense. Like, it's been all about don't discriminate, fair housing, ECOA, Equal Opportunity Act, all that stuff. And we're coming to the end here of this class, and we're being taught, everything needs to be on the up and up. No phony stuff, no lying on the loans. And this is actually training I'm taking. Listen to what this guy says and how he talks. Like, the slang and lingo he uses is so inappropriate. I'd only made it like halfway through this, but I thought I'll just document it because this seems very inappropriate as a training. This is a national training class for hundreds of thousands, if not 1 to 2 million financial professionals.
Okay, right now I want to go through there's some gray area to this non-QM. Let's go through some misconceptions on what a qualified mortgage is and what it isn't. And I'm going to nail down the most popular one. Let's start with this. One of the most popular misconceptions is that these are subprime loans, kind of like the loans back in the whack-a-doodle-doo days, which these are not. The minimum FICO on the
Did he really just say whack-a-doodle-doo days? And what's he reading? Like he wrote these notes on the back of just some kind of pamphlet? Like, this is not professional at all.
These non-QM loans is 600, not into the 500s. Our average FICO score for Angel Oak, and we've done billions of dollars in these loans, our average FICO score is 742. So this is not a subprime borrower. This is simply an underserved borrower that doesn't fit in Fannie Mae, Freddie Mac, VA, FHA, or prime jumbo buckets. This is literally that underserved borrower out there that doesn't fit in those buckets, but yet it's not a subprime loan by any stretch. All right, next myth is non-QM has very little oversight on these loans. So it's kind of back to the Wild West, and non-QM lenders are kind of going off the reservation. Folks, that is not the case. These are
Going off the reservation? The Wild Wild West? What is this guy talking about? Like, this is insanity. And just so people know, hey, what's up, Captain Rankin? They are making Wild Wild West loans now. They started this last spring where you can just qualify off of bank statements, 1099s. Basically, you can just fill out a loan app partially. If you have some kind of documentable cash flow, they'll make you a loan. So we are going back to the Wild Wild West of 2006 and 7.
are highly regulated. Virtually, it's impossible to go off the reservation in the mortgage business these days. So
Off the reservation. What is he talking about?
Next is all non-QM loans do not require a down payment, and they're difficult to close. They're hard loans to do. Folks, that's another misconception. Get with a non-QM lender that knows what they're doing, that focuses on non-QM, and you'll find they're much easier to close than you think. And if you have ever tried a non-QM loan years ago, let's say 3, 4, 5, 6 years ago, yes, calculating the bank statement income on those was a little bit wonky. However, the industry is now mature enough that this is, how do I put that? The best way to put it is we have these loans down. This is a very simple process. Don't overthink it. It's just different guidelines than agency. That's it. So with that said, bank statement loans do require at least 10% down, 10% skin in the game. Now, We non-QM lenders do allow gift funds, but we want to see at minimum the borrower having 5% of their own funds and at least 6 months reserves of their own funds. So there's skin in the game on those. On an investor cash flow or a debt service ratio coverage, those loans are at least 20% down. So with a borrower that has skin in the game, those loans truly perform. Now, on a full doc loan, these not
Skin in the game. I mean, this guy's just using, this is like sleazy used car salesman lingo. And this is the national safe required lending education. Just seems so wild. We are on the res now, homie. Exactly, Captain. Like, yeah, we on the res or off the res? Are you what's the res, man? What you talking about? We talking like that's just like not cool at all. Like language and
QM loans, we can go up to 95%. And there's never any mortgage insurance on non-qualified mortgage loans because it's already baked into the rate.
baked in.
So let's go into another myth. The non-QM market is not big enough, and you know what? It's not worth my time to devote any time on non-QM loans because, you know, it's not that big of a market. Folks, I'm here to tell you, this is such an underserved market. Now, here it is. Here we are, early 2020s, and the agency refi business is very strong. However, why turn away a borrower that is qualified on a non-QM loan, and just instead of just saying no? So with that said, there is literally this is going to be about a $45 billion a year industry, according to the Mortgage Banking Association. There are over 50 million self-employed Americans out there. That's 4 times the size of the VA market. So this market is growing. I recommend that as a mortgage professional, as an NMLS licensed mortgage professional, that you understand and get good at non-QM loans. I'm telling you, your bank account is going to thank you. All right, folks, that is about it on the facts and the myths in non-QM lending. I'm here to say, non-QM, jump in. The water's fine.
Nothing about helping people or taking care of them. Your bank account will thank you. Jump in, the water's fine. Like, this is my training. That was bizarre. Thanks for being here, Captain. Thanks for the thumbs up, guys. Just wanted to share this idiocracy.